Welcome to Public Affairs Roundtable, a discussion of current events in the nation and around the world and how they affect the people of Indiana. Here's your moderator, Larry Lough.
The official charge is conspiracy to commit illegal insider stock trading. We small investors are having trouble understanding the scandal in the investment banking business and what sort of crimes would be involved with an Ivan Boesky who would have to pay a settlement of $100 million. Today on Public Affairs Roundtable, we'll try to unravel this for us small investors and talk about the future of what a U.S. attorney says is going to be a very long and substantial investigation into Wall Street practices. Our panelists today are Ball State University professors Phil Howard from Finance, Bill Mosier from the Marketing Department, and John Rouse from Political Science. Phil, would you start by explaining to us what is insider trading?
Well, the definition of insider trading really has to go back to the Securities and Exchange Act of '34, which was passed after the Depression when a number of people, in an attempt to manipulate the market, in effect caused the stock market crash. There's the original definition under the Act was any scheme or artifice to defraud someone else in the sale or purchase of a stock. It was sort of a general definition that has gone through a whole series of court cases. But basically today it means trading on non-public information in the stock of a company.
Well, what is it that Ivan Boesky did that got him in trouble then, specifically?
Well, Ivan Boesky purchased inside information from various investment bankers in New York City. He paid one investment banker $700,000 in cash in a suitcase for non-public, that is private, information about a takeover attempt. When one company seeks to acquire another company, generally the stock goes up. If you can buy based on advanced knowledge, you can buy low, stock goes up 10 points. You've bought 10,000 shares, you just made $100,000.
And that's illegal?
That's illegal under several acts. The Act of 1934, a more recent act, aimed specifically at the takeover and merger type of situation, this Insider Trading Act of 1984.
John?
If I could ask a question, I think it's very important for us to establish the importance of the stock market, both as a credible institution in terms of the small investor or those of us who are otherwise in the economy, and also how it relates to the fact that if the stock market is increasing in terms of our economy getting better or something of that sort, is the stock market economy, so to speak, reflective of the overall economy? In other words, is everybody's income or situation getting better because of an increase in the stock market?
Well, not necessarily. Just because the stock market is good doesn't necessarily mean that the economy is great. But when there's a healthy market, people have a good outlook about things.
So that just is kind of a positive thing in terms of, you could say, as people have positive times in life or depressions, the country also swings back and forth between real depressions where things cannot get started, and so that could also be translated to the stock market.
Well, the market reacts to information. There's no question about that. Adverse information, whatever it has to do with the president, foreign affairs, can always affect the market. But you can be in a generally recessionary period, and the market can still be good.
In other words, there are opportunities to make money in there if you look at the information, try to make intelligent decisions, and interpret it better than somebody else in terms of a particular development, what it does, what it means, what its implications are. There's still an opportunity there. But what we're saying then is that the stock market has a relationship to the economy, and the question is, does the stock market today, does it have that same, at least in my mind, that same relationship to the economy as when we had an economy that was more production, more manufacturing, and less service? In other words, there is a change. I perceive a change in that role that it has. It has become more of a valuable or critical issue in terms of trading within it becomes more of the game itself rather than just a reflection of what the economy is doing.
So the thing you're saying that it's very important to have a credible, honest stock market
Well, that's absolutely
because the other issue I spoke of, the fact that if we have a positive economic picture, it means that everybody is going to be more likely to say, hey, I can do positive things in my individual job. So everybody looks towards kind of a growth kind of thing instead of something that is going to be depressed.
Right. I think what Larry mentioned in his introduction, how these issues affect the individual investor. The individual investor, I think, has an expectation of a fair and honest securities market.
right.
When they read in the paper that people are, in effect, cheating, using illegal means to gain $100 million profits, it makes them wonder if that's where they should put their money. When they read that the investment bankers are giving out information that's non-public, the individual investor wonders, how can I compete in a market like that? When, I mean, the market's based on information. These people are trading information that's supposed to be private. How can I compete? That's one of the major problems with the insider trading issue.
So if we're citizens here in Indiana and we're deciding what we're going to do with our money, if we see an undesirable situation in the stock market, we're not willing to invest there, it makes it much more difficult for corporations to raise funds and that sort of thing, to grow, to acquire new technology or anything of this nature then. It really shuts that opportunity off, does it not?
There's all kinds of investments that the individual investor can make. They can go into real estate, they can buy rare coins. They don't have to go into the stock market. But the stock market relies on the individual investor. Millions of people all over the country, even the individual here in Muncie that owns a few shares, that's who the market relies on. If those people don't trust the market and they put their funds into other areas, they can go to the banks and get money markets. That's going to hurt the stock market.
And ultimately corporations that are trying to develop and grow and do
Corporations
research
who
and that sort
finance
of thing.
themselves through the issuance of stock.
Right.
Exactly.
What market situation has created this atmosphere where we have a lot of insider trading information? Obviously, it grows out of a number of corporate takeovers, or an atmosphere where there are a lot of corporate takeovers. How has the market set this up? The fact that there's a lot of money, that it has been a relatively good market over the past year, that people are making money there?
Well, the traditional insiders were considered to be officers and executives of a corporation, people who traded the stock of their own company based on inside information, whether of a takeover or not. It could have been about an adverse third quarter profit report or an adverse sales of a product line. That's the traditional insider, an officer or executive. What we're looking at today in the era of merger mania, as some people call it, is a whole army of people who have inside information, not just officers and directors of a corporation being acquired or taken over, but the investment banker they have to work with, that the takeover corporation has to work with, the printing company that prints up the tender offers, the public relations firms that have to be notified in advance to make the announcements, a whole slew of people who have inside information. So the real question is, how do we get to a place where mergers and acquisitions are so abundant these days? I think someone called the period from 1975 to 85 the decade of the merger. And it's historical. I could name 5 or 6 reasons. But basically, after the recessionary period in 1974, there was a period of inflation. Companies' assets inflated, but their stock price didn't. So companies were undervalued, as well as the fact that the inflated assets led to excess cash flow. So on the one hand, you had companies with a lot of cash. On the other hand, you had companies that were undervalued. They were easily taken over. And it's just fed on itself.
John?
I think we have to look at this whole discussion, the whole issue, in the context of the larger perspective, perhaps. And in society, we have a number of value issues that are really impinging upon our lives, at least indirectly. We look, of course, at the Iran-Contra scandal that is impinging upon government right now. You look at the issue of corporate mergers, which is an issue we've alluded to today. Also the issue, of course, we're talking about insider trading. And there's a great deal of emphasis upon AIDS and sexual behavior. So underneath all these issues, you have the rights of the individual to do certain things and the rights of the entire society. And so we have to be very careful not to say that to blame this this fallout in terms of value systems upon the entire society, or do we not? In other words, the entire stock market on this particular issue is not at fault. It's the fact that you have individuals who have taken advantage of certain privileges or rights in the stock market society, so to speak. Is that a fair assessment?
Well, John, I think that's a fair assessment, but I think we have to look at it. Any institution that wants to survive has to do some self-regulation. And I think there is an issue of looking at your own and trying to do that, or you are going to then have further and probably even more restrictive government intervention. So I think any institution that we will look at, if we put it under the same bright light that the SEC is doing to the investment industry right now, you would have individuals and situations where you'd see things that are less than desirable. I really think that this is a microcosm of what you see in other parts of society. That doesn't excuse it, but I think it really does say that there are some problems ethically in some other areas, and I don't think this is totally unique. I think there are some relationships to other institutions, but I really strongly feel that institutions have an obligation to do some self-regulation. In other words, they understand what's going on there better than anybody from the outside, unless somebody like the SEC, where they're taking, what is it, they've been 9 months in this investigation, they figure it'll be another year that it was going to take. Well, that's a tremendous amount of effort going in there and trying to really see what's wrong, and it's a very complicated issue.
So if you take those three issues that I named, if you take the issue of sexual behavior in the institution of the family and the credibility of the family, if you take the issue of Iran and the credibility of government, if you take the issue of the stock market and the credibility of the stock market. So here we have three kinds of issues where credibility, believability in institutions is pretty much cross-current in terms of hitting all of these institutions.
And
well,
go ahead.
I think you might have hit it on 2 out of the 3.
Okay.
I think that
Okay,
Not bad.
you're going to explain?
I think that there are parallels between the Iran-Contra thing and basically people who are defying the law and the insider trading scandal. Now, I'd have to stretch a little bit to relate that to the current AIDS epidemic, or somehow relating that to the sexual permissiveness of the 60s. I don't see that.
Well,
connection.
it relates in this sense that if you look at success and excellence, but I think all of these are values in terms of the rights of individuals versus the rights of society. And if AIDS is as serious as people say it is, perhaps this will also be an issue in terms of the rights of the majority versus the rights of individuals. And you also have the issue of the rights of individuals in terms of what kind of information should they have with the stock market, and also the rights of Lieutenant Colonel North and his effort to prevent some kind of investigation. So you have an issue. I mean, it's all of these issues seem to impinge upon credibility.
If we can look at these individuals who are involved in this, you're not talking about poor men here. You're talking about people who are already millionaires. You're talking about people, like you say, Bill, they're bad people in politics. They're bad people from all walks of life. But when you get people who, in fact, are millionaires already, what's the motivation to do these kind of things? Maybe we need a psychologist here, not economists and political science. Why do these people need millions upon millions of dollars? Is this an ego trip?
Well, there have been plenty of psychologists who have analyzed on paper some of the people involved in these things, and it's basically, I think, a psychopathic personality, some sort of desire to excel, like you said. I'm no psychologist either.
Overwhelming desire to excel, almost.
Yeah, to the point of self-punishment. Dennis Levine, who was really the person who broke the Boesky scandal back in May, he continued to trade on inside information even when he knew the SEC was investigating him. It was almost like, catch me, I want to be punished for my sins. But, I mean, it's not just millionaires that are doing this. There are typists at law firms who are making $50,000 at a pop based on a memo they read. There are people who work for printing companies who print up, like I said, the tender offers. These are not rich people, but they're people who are presented with the opportunity to make a lot of money in a short amount of time.
The temptation is there.
Definitely.
I think something else we could emphasize, or has an aspect of, the fact that the business schools, these people who have been charged, come from our best schools of business. Harvard, Wharton, for example, come to mind. And you
schools of business and schools of law.
And, okay, schools of law. Okay, that gets back to the issue that I raised earlier about ethics or values. And what are we teaching young people about? I mean, they are taught to be successful in the sense that they focus upon a preoccupation with material advancement and getting ahead versus excellence. And, of course, everybody wants a better standard of living. So I'm asking the question, perhaps the problem goes back to the teaching or the genesis in terms of where these people are taught ethical values, and the question would have to be raised, are they taught ethical values at all?
Well, I'd even raise the question, there's no doubt, AACSB as an accrediting agency, they have pushed for ethics to be pumped into more of the courses as well as additional courses. This is something that was two of the key areas that they focused on. But I would question that you can accomplish what you need to at that point. I think the ethics starts earlier, and I'm not sure that you're going to change somebody's perception in the 4 years of college if the ethics have already gone askew earlier. In other words, as they go through grade school and high school and that sort of thing, you're going to help it. But I think it really starts at the family, and it goes through, and it's broader, it's more societal. There is a recognition that it's a challenging issue that universities have to deal with, that all institutions in society have to deal with, because I really see it as being far broader. And I don't think college of business or law schools are any more excused or any more responsible for this than any other part of society. I think it's something that is difficult to knit that into all of your course material and that sort of thing, because one of the areas that I spend extra time on in my industrial purchasing class is ethics. And it's fascinating to watch the student response. And it's something that they're not comfortable when you start talking about the issue of ethical responsibilities, because it doesn't sync well, doesn't synchronize with the things that they're getting in their other courses, that sort of thing, because they're more the promotional direction. And I know that this is something that I spend a longer period of time than a lot of other people do on that because of my strong feeling of this nature.
It's a highly competitive field, too. I mean, when you're talking about it, you get to the Ivan Boesky level, that it's high stress, it is highly competitive, and there would seem to be an opportunity for a lot of people to be involved in this. I assume this is a relatively small number of people in the investment banking industry who are actually involved in this, although, or is this a more common practice that really hasn't been prosecuted, really hasn't been pursued before?
I think there's still a question about that. When I looked at this issue last summer and did some research on it, I predicted then that the Dennis Levine case was the tip of what would probably prove to be a very large iceberg. Boesky is what we're starting to see as part of this big iceberg, and I think there's going to be a lot more. I mean, I saw statements that as early as 81 and 82 that insider trading is rampant on Wall Street. I mean, people have been saying this for a long time. In fact, I read that the exchanges themselves submit documented cases of insider trading to the Securities and Exchange Commission, but they don't have time to investigate because these investigations take so much time. So now, it's there, and it's a problem. I mean, when you see statements coming from market professionals that say insider trading is rampant, insider trading is a way of life, I have to believe what they're saying. That's not to say that the whole barrel is full of rotten apples, but you know, if one rotten apple spoils the whole barrel, then 10% rotten apples makes it even worse.
Yeah, especially if the credibility is no longer there for the small-time investor to participate. A large question for either one of you fellows is, does the marketplace reward quality, integrity, and ethical conduct? And if so, how?
Well, I think Bill would agree with me. The market does reward integrity and honesty. And I think if we could see more stories in the media about people who have been honest and have, the rags to riches stories, I love those stories. But I don't like them when the person has used devious, sometimes quasi-legal means to get their fortune. But a second prong to that answer is that guys like Ivan Boesky, you could say that Ivan Boesky has been rewarded because of his dishonesty, $100 million. But his reward, it came to a screeching halt recently, and he had to, that was the amount of his fine, $100 million. he's barred from ever acting as a professional in the market again. So I don't think you could, even by a stretch of the imagination, say that dishonesty is ever rewarded in the market. You might get away with it for a while, but
in other words,
sooner or later it'll catch up
we
with
need
you.
to look at short-term versus long-term rewards, and there's no question sustained reward is for the excellence,
That's
the
right.
positive performance. The short-term, like Boesky in that situation, he got great rewards in the short term, but he got severe correction of that in the longer term. So that I think that's the more realistic way to understand that positive side of the thing. But obviously, in the short run, there are people in every area that can get away with things, but it catches up with them, but it takes time for it to happen.
Maybe the system works because Ivan Boesky's been caught. Some other people are under suspicion now, under arrest in the insider trading scandal. But when we get to the base of this iceberg, you talked about, we've just seen the tip. As we get to the base of it, and Congress starts to look at it and say, and you have politicians who answer to short-term desires of the constituents, are we going to see, or do we need to see, some legislation on a federal level to try to control this insider trading problem?
I personally don't think we need any more legislation. I think the legislation to do this is in place. The Act of the Securities and Exchange Act of 1934 that created the commission and originally set out a lot of these rules has been there since 1934. It's been interpreted by the Supreme Court. Everybody has a good idea of where the court is going, who is an insider, who is not, what's legal, what's not legal. The Securities Act, Insider Trading Act of 1984 just increased the penalties. It used to be that your only penalty was you had to give up your profits and pay a $10,000 fine. A $10,000 fine is nothing if you can make $50 million. and your only other problem is you might get fired from your job. The Insider Trading Act of 84, I think, is the last piece of legislation we need. Let's see, increases the fine to $100,000 plus treble damages. Treble means 3 times the amount of illegal profit you made. So if you made $10 million illegally, you could be fined $30 million. There's some incentive there, even if you don't have any ethics, not to trade. Plus, there are criminal penalties attached. So while Congress is probably meeting this week, no doubt, the Banking Committee and so forth, to discuss legislation to curb insider trading and probably to address the issue of mergers and acquisitions as well, I don't think we need legislation in either area. The antitrust laws we've had for a decade now, I think they're good laws. They haven't been enforced for the last 6 years. So I don't think we need more laws. I think we need to enforce the laws that we have. And the Securities and Exchange Commission needs more resources. They need more people. Like I said, they get documented cases forwarded to them that they can't prosecute because they've got a staff of 600 people. They're badly outmatched.
Isn't this going to be like a case, all of a sudden you see a policeman on the highway and he stopped one person for going 62 miles an hour or 63 miles an hour, and the speed limit's 55. So aren't the people in the stock market, they're going to all be slowing down, so to speak, and it's be kind of, for a few more miles on this highway of the stock market, people are going to go slow, but maybe after this cools over, or however you want to say it, they're going to start speeding again.
But that's why Phil says you need sustained enforcement rather than in short bursts. You need the resources for it to be done on a sustained basis. And I think that's where Congress has been remiss. There's been a reduction in the amount of resources there, and they're hoping that it would take care of it. Well, obviously it hasn't for the lack of resources.
Are these difficult laws to enforce, though? I mean, conspiracy is an extremely, sometimes extremely difficult thing to prove. Was it a conversation? Was it a memo? Was it something he implied or something I inferred from what he said? Doesn't that make it rather difficult to enforce, though?
In almost all of these enforcement actions, they have some sort of anonymous tip. It's surprising how, in conspiracy law, there's so many people involved, and you can look at conspiracy as the hub, the person in the center, and the people around the wheel. There are so many people involved that somebody's going to blow the whistle, and if you can go to, it's actually easier to prosecute conspiracy actions. And in fact, there's a number of recent changes in the criminal law area that make it easier to convict in conspiracy. The most minor person in a conspiracy can be convicted of the most serious crime. You go to this person and say, we're going to convict you for this, but we'll grant you immunity if you testify And that's how Dennis Levine turned over Ivan Boesky. Ivan Boesky is going to turn over all these other people. They, in turn, will turn over everyone they know.
Larry, I think this is also a very patriotic kind of issue, because the way I've defined patriotism, if perhaps you've heard this before in this program, is honesty, productivity, and fairness. And these gentlemen who, if they are indeed found guilty, have violated the focus of fairness and honesty. And they've been less than productive in their daily work, or they've been too productive for themselves. So in a sense, what this does is to violate that trust of patriotism in America. And if the institution of the stock market, just as if these other institutions fail us, they have not been as patriotic as they could have been.
Don't want to follow patriotism. We'll start with patriotism. You'd mentioned that, of course, the market feeds off small investors, that in fact there's obviously a base there. Then is your advice then to small investors that the market is still a good place to do business, that they don't have to turn to real estate and coins, that the market is a place where you can trust that your money will be handled well?
Well, you know, there are people that argue that there's nothing wrong with insider trading. In fact, there's Henry Manny, who's the dean of the law school at George Mason University. He's been all the recent talk shows about insider trading. His contention is there's nothing wrong with it. It doesn't hurt anybody. And he could bolster his argument today, I think, by saying, look at all the information about these scandals, and yet the market has just gone straight up. Nothing has hurt the market since all of this started. But on the other hand, I think I would argue that that shows that people have confidence in the enforcement powers of the SEC. The fact that everyone has known for a long time that this is going on, the fact that now we are seeing prosecutions and disgorgement of profits, indicates to me that the individual investor has confidence in the market.
And probably could afford to now, because it's being looked at so closely. It's probably going to be even harder for the insider trading.
Yeah, so I agree that the market is a good place to go.
But the insider trading scandal probably has questions. People have questions about the fairness. I mean, to say that there's nothing wrong with insider trading, there seems to be a real problem in the fairness between the small investor and large investor.
Yeah, I don't agree at all with the contention that there's nothing wrong with insider trading.
Okay, that wasn't an endorsement then. We're out of time. Thanks to our panelists, Bill Mosier, Phil Howard, and John Rouse, for their commentary and comments. I'm Larry Lough. Thank you for joining us.
If you have comments regarding this program, please address them to John Rouse, Box 149, Muncie, Indiana, 47305. The producer for Public Affairs Roundtable is John Rouse. Associate producers are Bill Mosier and Mike Seaborg. This program is a production of University Media Services, the Department of Political Science, and radio and television stations on the campus of Ball State University in Muncie, Indiana.